Welcome, my name is Vincent Luce with Forex Trading Institute. Please take a couple of minutes and go over the following risk disclosure. Lesson 5, Trendlines and Trading Trends. The trend is your friend until it bends. And this is a very important saying in the market because we always want to trade with the trend and in the direction of the trend. So this lesson is going to help you determine if we're in an uptrend, downtrend, and how to draw our trend lines to help us make this determination. Now, when we're in an uptrend, and we're going to learn about the ABCDs, okay? And I really believe if you understand the ABCDs and the 1, 2, 3, 4, 5s, you're on your way to become a successful trader. Now, the A is the point where the market starts to rally, starts to go up. Now, it becomes to a point where all these bulls are buying, and then they start taking profit and make the market start to make a retracement. Okay, this point is called the retracement. And the point where it starts to retrace is what I call the B. Now, the market starts to rally back, and then bulls start getting back in the market. They start buying, and they cause the market to rally, and they're going to try to make a higher high. And they're going to try to break that B. And when they break that B, we have that run from C to D extension. Okay, and this is what we call the C to D extension. And we know it's an extension once the D, once it is higher than this B. This is a level of resistance. It has to break. It has to have enough gas in the market in order to break that point, and it makes the extension. And then the market starts retracing back, and it'll probably make another run if it continues in its uptrend. So let's look at this in the market here, and we can see this is the Great British Pound against the U.S. dollar. And here's the A. Here's where the market started to rally, and we see a big rally here in this candle. And then all these people who made profit here, look at this. This is about 100, almost 200 pips in 2 hours, and then the market started retracing back. Okay, and we knew that this was the B once we had 1, 2 candles to the right and 1, 2 candles to the left. We had a high. Okay, the market started rallying back. Then we got a bullish engulfing saying we're getting buying pressure back in the market, and it started to rally, and it broke this B high, and it formed a new D, and look how we had a new high. And then the market probably going to rally back, and then this is old resistance probably going to come future support here. So the market comes back, probably bounce here, and then make a new A, B, C, D swing. Now, when we're in an uptrend, we're making higher highs and higher lows. For example, here we see this high is higher than this high. This high is higher than this high. This high is higher than this high. Just like higher lows. This high is higher than this low. This high is higher than this low. This high is higher than this low. And we'll see. Let's look at this in a chart, and we see that this high is higher than this high. This high is higher than this high. This high is higher than this high. Now, when we're in an uptrend, okay, and after the ABCD forms, this repeats. And see, we're making higher highs and higher lows. And we see the market goes A, B, C, D, and what happens is that the C turns into the new A. So we replace the C with the A. Once the D is formed, then we replace the C with the A, and we replace the D with the B, and the market goes A, B, C, D. And then it goes A, B, C, D. And as long as we're in an uptrend, it continues to make these A, B, C, Ds. We buy at C, sell at D. Buy at C, sell at D. Buy at C, sell at D. You're going to learn other tools to make your to confirm that where is this C going to occur. Okay, so in order to buy C and go to D, and as long as we're in an uptrend, we're only looking for buy signals. So let's look at this in the this chart. Look at here. A. Just close that out. Okay. A, B, C, D. A, B, C, D. A, B, C, D. And then we got the A, B, C and rallying up to D. We're making higher highs and higher lows. Look here, we would have bought at this engulfing, sold these tweezer tops. This was past resistance, future support. We buy, we rally up to D. Then we buy at another bullish engulfing. Okay, we rallied up to D. Buy, and we rallied up to D. You see how in an uptrend we have a lot of opportunities to buy C's and sell D's. Now, when we draw our trend line, the first thing we do when we open up the chart, we're going to locate all these A, B, C, D's. Then we're going to draw 3 trend lines. We're going to draw an inner trend line, an outer trend line, and a long-term trend line. Okay? An inner, an outer, and a long-term. Okay? And we're going to show you how to draw these trend lines. Now, these trend lines are points of resistance, okay, where the market might bounce. They're future locations of support where the market might bounce and buyers might start getting near the trend line and it starts rallying, and it'll help us find our C's. It's one of the tools we use to find our C's, obviously in conjunction with regular or horizontal ABCDs and horizontal support and resistance lines. Now, when we spot an uptrend, okay, we draw trend lines connecting the A's with the C's, okay, and we connect it to the bottom of the candles, and we never go over the candles to the bottom of the candles. We connect the A's with the C's. Now, to find the inner trend line, okay, we're going to go to the right of the screen, and we're going to find the latest, the most recent. Here's where the current price is right now, and we're going to find the last A, B, C, D swing, and we're going to connect the A with the C. For example, here, look, we start on the right, A, B, C, D. Okay, this was here's where the market is right now. Well, we have an A, B, C, D. This is the latest swing, so we're going to connect our A through the bottom of C without going over any candles, through the bottom of the candles. Now, to find the outer trend line, we go to the left hand of the screen and we find the first A, B, C, D that we see. So here was the first A, B, C, D, and we connect the A's with the C's. So in the same chart, this was with the inner trend line, A, B, C, D. So we draw our inner trend line. And then we go to the left-hand side of the screen, and look how we had our first A, B, C, D. And I connect the A with the C, and we extend it to the future. So here we're in a clear uptrend. Now, it's important to draw the inner and outer, because when we get breaks from the inner trend line, the market usually goes and looks for the outer trend line. We got a high probability that it will bounce at the outer trend line. And in order to find the long-term trend line, we have to compress our chart or go to a larger time frame. So if we're doing this in a 60-minute, we might have to go to 240. And then if we're doing this in a 240 chart, we might have to go to a daily chart. We usually like to do increments of 4. So if you're looking at a 15-minute chart, the next chart up would be a 60-minute chart, and the next chart up would be a 4-hour chart. If you're looking at an hour chart, the next chart up is a 4-hour chart, and then 4 hours up, it's a daily chart. Okay, so we can press, and here's where you could press to compress the screen. Okay, and you see how we compress the screen, and then we'd find the most recent A, B, C, D from the left-hand side. We find the first A, B, C, D, and now we got our long-term trend line. And if it breaks the inner, the outer, it's going to go and look for the long-term. Look how there's a lot of space, and it'll probably start doing A, B, C, D's in a downtrend here. Okay, when the inner trend line is broken, the market predominantly moves to the outer trend line. And when the outer trend line is broken, you could have a major reversal. Okay, so here we see an inner trend line, A, B, C, D. This is recent. And then we had an outer trend line. See how it broke the inner trend line? It went to find support at the outer trend line. It broke the inner trend line and it went to find support at the outer. Here's where we would have projected a bounce. Now, rules to trading an uptrend: draw all your trend lines, inner, outer, long term. We find the latest AB, and we use the Fibonacci tool on your software to find the retracement. These are levels of support and resistance, and we're going to learn in a future lesson how to find Fibonacci numbers. And we try to find a convergence, retracement level on a trend line with a candlestick formation of future resistance becoming support, pivot point, and then we confirm it with some indicators in order to make our trading decision. And we're going to learn all this during this course. Okay, so rules to trading: continue to place a protective stop loss at A if the equity management allows, because A would be the low. If it does not allow, trade according to the candlestick formations. This is where we put either 15 pips above or 10 pips below, and we find our projected Fibonacci number for our extension, and we try to find a convergence to put a limit at a support or a resistance if we're in an uptrend or a downtrend. Here we're in an uptrend, so we would find a resistance level to converge with Fibonacci, and we would find some pivot points in order to find where we're going to take our profit. Remember, the bulls want to score a point and then pull back, so we want to take our profit. And obviously, we always want to follow our equity management. If there's too much risk, we stay out and don't trade. There's going to be plenty of opportunities with good equity management. We don't have to take high-risk trades. And we pull our trader's checklist and we create our trading plan. Now, in a downtrend, it's the same thing, just inverse. The A becomes the point where the market starts to rally down. So here the market started to rally down. Then it pulls back. All these sellers. And remember, to close a short position, you got to buy. So when you buy and you're closing these short positions, the market starts making a retracement. But it starts only retracing because we're closing shorts. All these sell position, all these bears, and then the market starts retracing back until the point where it starts to fall again. And there's our C point, and we're going to go to D. And this is an A, B, C, D. Let's look at this in a chart. Look how we had A, B, C, D. And we started doing, because remember here, look at here, we would have had an A, B, C, D. I would have drawn my trend line, and we had a trend line break. When I have a trend line break, I start doing A, B, C, Ds in a down trend. So where this was an A, B, C, D, now we're doing A, B, C, Ds in a down market. Okay, and same rules here apply. We're doing lower lows. Okay, so when we're in a downtrend, instead of making higher highs and higher lows, we're doing lower lows and lower highs. Let's look at this in a chart. Look how we're doing lower lows, okay, and lower highs and lower lows. Okay, so there's a clear downtrend. Here we're only looking for sell opportunities. Remember, the trend is our friend. We want to go with the trend until it breaks, and then when a trend line breaks, we start reversing and we start going in the opposite direction. We always want to go with the trend to take high probability trades. And here we could see the A, B, C, Ds repeat themselves. A, B, C, D. A, B, C, D. They repeat themselves. Okay, and same rules apply. C's turn into A's, D's turn into B's. Okay, and we're looking for all these opportunities. Look at all these opportunities. A, B. We would have shorted here on this bearish engulfing, and we take our profit at D. Then we sell here at this was support, now becoming resistance, and we take our profit at D. We had a nice another bearish engulfing, we sell, we take our profit in D. And look how we make money. There's a nice thing about the Forex. It doesn't matter if it goes up or down. All we got to do is determine whether you're going to be bears or we're going to be bulls, and we're constantly changing teams in uptrends and in downtrends. Here we sell C, buy D, sell C, buy D, sell C, buy D, and we make profit all the way down. And this is a great thing about the Forex. We don't have to worry about how the economy is worldwide. We can make money when the market goes up, and we can make money when the market goes down. Now to draw the trend lines, okay, the same, we have an inner trend line, we got an outer trend line, and we got a long term trend line. Okay, and the inner trend line, the only difference here, now we're going to put them on the top of the candles. When it's an uptrend, we do them on the bottom of the candles. Now we go on the top of the candles. Okay, and we connect, same rules apply, we connect the A's with the C's and we extend them. And these are future levels where the market bounces back, and then the market goes up and bounces back and it goes back down. And we could see this here. Look at the market, went A, B, C, D. Okay, and then we had an A, B, C, D. And it was all inside this big A, B, C, D, and we could have drawn on top of these candles. And always make sure that we get a D in order to put a connection. So we have lower lows. That's how we know we could draw these trend lines. Now the inner trend line, we start at the most recent price and we find the latest, the most recent A, B, C, D. And we draw a trend line over the top of these candles. So we're in a clear downtrend in this situation. Okay. And we could see this in this chart. Look how we had an A, B, C, D. We were in a clear downtrend. Now, to find the outer trend line, we go to the left-hand side of the screen and we find the first A, B, C, D. This is the most recent A, B, C, D, and this is the first A, B, C, D. And we connect the A with the C. Now let's look at this in the chart. Look at this big A, B, C, D from the left-hand side of the screen. So I connect my A, and I connect it to the point here on the C, and we draw a trend line. And the C point is the point where the market starts rallying and it passes the B. For example, this won't be C because the market never passed B, then the market went back, and then we had a C, and then it went to the D, and it passed this B point. Okay, and then we have to compress our screen in order to find the long-term trend line. Okay, or we go to a larger time frame. Remember, always using that 4 increment. We're looking at a 60, then we go to 4 hour. And we're looking at 4 hour, we jump all the way to the daily chart. Or the daily, we jump to a weekly. Okay, and here we could see it. A, B, C, D. This would be our outer trend line. And then we had an A, B, C, D. This would be our inner trend line. And we would have to go here to this tool right here, and we compress our chart. Okay, and we find the most recent A, B, C, D. Okay, so once it's compressed, you see how we compressed it. Go back here, A, B, C, D. It was inside this big A, B, C, D. So this is the long term, and it's important because when it breaks these inners, it usually goes, and look how it found resistance. So that's why if you're going here and it breaks this inner trend line, most likely it's going to go find the long-term trend line. Okay, remember, a trend line break, the next place it's going to find resistance is at the outer, and then if it breaks the outer, there's going to be a major move doing A, B, C, D's up all the way to the long-term trend line, the inner and outer and long-term trend line. See here, look at this inner trend line. We had an inner trend line break. The market rallied all the way up to the outer trend line. So we would find a bearish engulfing. Look at the bearish engulfing. That would have been our sell signal right on the trend line. We could have also pulled our Fibonacci tool from A to B, and we would have probably seen that we're at Fibonacci 618 retracement going to our D extension. And you're going to find that there's trends inside of trends. Obviously, here's not a downtrend, but when it breaks the inner trend, it starts doing A, B, C, D's to the outer trend line, and then we're going to see that it does a crown. We're going to learn that in future lessons. The market crowns, and then it starts again downtrend, and then when it breaks in time, it goes to the outer trend line. So this is a small term here, uptrend, but we're still in the overall down trend. But there's plenty of buy opportunities here until it gets to this outer trend line. And we could see it here in the market. Look how we had a downtrend, then we broke the inner trend line. The market did a rally, A, B, C, D, all the way to the outer trend line. Then it broke this inner trend line, and then it started rallying. Okay, and most probably in the future will break and goes thing. And this market continues to move in this way. That's why this is important to know where the trend is. Okay, and there's ABCDs inside of big ABCDs. You're going to see that this could be a big A, B, C, D. Okay, you see how there's A, B, C, D, and inside of these there's a bunch of little sub, like what I call them, sub A, B, C, Ds. For example, look at here. We have a big A, B, C, D, but we have sub A, B, C, Ds. Just like here, look how many little sub A, B, C, Ds. Now let's go to the live market and let's find this. So I'm just going to switch the screen here. I'll continue recording. And let's go, for example, here we're looking at a dollar Swiss franc, and we do this in all the different time frames. Okay, so we got to find our ABCDs. Let me erase this line. This was our support line. Now let's hear the text, and we could just change the font. Okay, go okay. Look at right here. It says text ABCDs, and it's good because we could draw our A. For example, here's where the market started to rally. Let me change the color of the font. You could change it here, and you could put it bold, and you could put it. I like putting it at 28, just because you could see it better. Right. So we're gonna go here A. Sometimes it likes fighting with me here. This charting package. Okay, and there we go. Right. So let me just put this up a little so you guys can see this. And look here, the market started. Here's where it started to rally. This was the A point. Okay, so I would draw a line right here. Okay, and look at the market. It started rallying to this B point. Okay, and this was the B. Okay, and the market retraced back. Okay, and it did a C. Sorry, that was the D here. Let's put the D up here. It did a C, and then the market rallied all the way up to D. Okay, so this was our A, B, C, D, and we're starting from the left-hand side of the screen. So now we get this tool right here, and we draw our trend line, and we connect the A with the point of C, and we just release it. And if you you right-click and make sure it's extended, and it extends it to the future. Okay, so this would be our outer trend line. Now look at this move from from C to D. Okay, they were small sub ABCDs. So I'm going to put them as lowercase, and look how I did an A. Look how I did a B. Look how I did a C. And look how we did a D. And we do this in every single time frame. I like to use the daily, the 4-hour, and the 60, based on my trading style. Those three charts, and I also look at a 15-minute chart. Okay, and I do all this analysis on each one. I do the inner and the outer trend. Look how this is my most recent A, B, C, D, and now I could find my most recent A, B. It would be here. This is the most recent A, the most recent B, and the most recent. We're looking for the C. Now I can't draw a trend line here, and for example, this is an error I see a lot of students make. They might put a trend line here. Like, why can't I do a trend line here? Because I don't got a higher high. Okay, until this doesn't break this high. Remember, I have to be doing higher highs to know we're in an uptrend. This is the dollar against the Swiss franc to make higher highs, knowing that we're on an uptrend. So this is not the inner trend line. Now this is our AB boundary. Okay, and this is important to know that this is our AB boundary because we're trying to find a new rally to D. And look how we have a bullish engulfing. The market started rallying. Now we have a bullish engulfing telling us this is ready to go to D. The market is screaming at us here, buy, buy. I want to make some profit. Just look at and here we could measure with this little tool here, BI. We could measure, for example, from here to here. There's 398 pips. Look at the left-hand side where it says range. Okay, like right here. See where it says range? Okay. If you take it up where the candles, it measures, and we have 395, and it says it occurred in 6 bars, which means each bar here is a day. So in 6 days, 398. That's almost $4,000 for every one lot for a $1,000 investment. All right, let's look at another example. Let's open another chart here. Let's do a downtrend now. Okay, let me close this out. Let's go back to our screen here. Okay, and now I'm going to compress this. Okay, and look at this rally. Look at the euro. It went from 160. We're talking this from July, end of July, till December. Okay, we've rallied from it was fallen from 160 to 127. There's a saying in the financial markets that the bulls go up by the stairs. They use the stairways. The bears jump out the window. Yeah, that's why you see that it takes them a long time to rally and then it falls really quick and panic. So let's do a downtrend. Okay, so now we got to identify where did the market start to fall. Let me just make sure we got this in black. Right? Black, bold. And I like putting it at 28. Okay, and we can put here. Didn't change the color, so let me go to the font. Sometimes you got to do it several times for it changes the color. There we go. Okay, so here's where did the market start to fall? Right here. So that would be our A. I usually like putting a horizontal line on top of it, so I know that this is where the A price is. Okay, and the market started to fall all the way to here, and then it retraced back. Okay, and I put a B here. Okay, here's where it started to retrace back, so that's my B, and I could put a low point right here. Now I go to C, and here's where the market started to fall, so that's my C. And I could pull my Fibonacci, and you're going to learn this tool in future lessons, and pull from A to B. Look how the market retraced back from 38%. The rule says it's going to go to 161% approximately. And here was my D extension here. Okay, look at it. What a nice run you would have taken here along a short position here. We're talking about 2,400, almost 2,500 pips. That's for every 1,000, $25,000 profit. You put 4 lots with 4,000, you made 100 grand. On this run, and then I connect my A's with my C's. This would be my outer trend line. Okay, and the same thing applies here. Look how the market did. Okay, here's where we are. This market did sub A, sub B, in this long run. The market's constantly making these C's, and then it went to D. Okay, now I would draw my trend line down, connecting the A's with the C's, and we broke the inner trend line. Remember, I said it breaks the inner trend line. Most likely it's going to go and find the outer trend line. This is what the euro is going to do. And we're looking here at A. This would be the new B, and we're looking for a new C at that trend line to rally down to D, and this would be my new big AB boundary, okay, which is inside of this. Sorry, I don't want to move that. Okay, inside of this small AB boundary. So either way, we're looking for a C, and here we might use all our tools. For example, if I pull my Fibonacci from A to C, we're looking at the trend line. It would be a 382 bounce. So it's probably going to rally back here and then fall down. Remember, inline trend break. Then we're going to start looking for sell signals at the outer trend line. We're probably going to have nice buy signals doing small A, B, C, Ds. We might even do a small counter trend. A, remember the markets, there's trends inside of trends. B, C, and then it's going to go and do its D extension here, and then pull back again. So this is how you do the A, B, C, Ds. And this is a very important lesson. I suggest review this material because this is, if you just trade with the trend and understand in what direction it's going, okay, you're going to increment your trading success in the market. Okay, my name is Vincent Luce, and I'll see you at the next lesson.